The big news of the morning, the Dow suffering its worst point drop ever yesterday, and the 10% drop was the biggest since the market crash of 1987. After the major sell-off, investors now want to know how much more pain is ahead, or could things turn around? Let's bring in David Bailin. He's Chief Investment Officer at Citi Private Bank. Good morning to you, David. On this morning, what are you thinking?
Well, after a day like yesterday, what you're really taking a look for is what is the government response in terms of support for some of the issues you've just been talking about. The support basically in two areas, as you were talking about with Dr. Epstein, which is what's taking place in terms of information to the market about what's happening with the healthcare crisis. What should people be doing, and what behaviors do we see? We see companies making all sorts of decisions to basically flatten the curve, to spread out the period of time when people get exposed to the virus, to minimize the total load on healthcare, hospitals and healthcare providers. And that's taking place. But again, people feel very uncertain about that. And then similarly in markets, what you want to see is centralized government action by the U.S. and then coordinating that globally with other countries to basically provide underpinnings for support. And that goes in a few areas. One you've just talked about, hourly workers, people who are displaced, industries like airlines and travel and others, and potentially even insurance, who need to know that there's support underneath them in order to be sure that these things have essential cash flow, individuals and businesses, to basically get through what is a known period of time. It's not as if we're talking about many years. This is an exogenous shock. So what happened with markets yesterday is yes, please.
Well, I was just going to say, David, so the markets have now given back all of their gains to the point where we are effectively back. It's like we're living in September of 2018, right? And I was talking to a hedge fund manager about this yesterday. So then you have to say to yourself, 2018, September 2018, are we in a better or worse place today than we were then?
Really December, isn't it? December.
Right. So the way to look at it this way is, where were we as we entered the year? Consumers, I think, were very flush. They had good savings. Businesses, I think, were going to be rebounding to a demand from consumers. We saw that globally on January 1st of this year. So when we entered the market, I think things were in a pretty good situation just 2.5 months ago. So the question is this going to push us into recession, or does the demand for businesses and consumers come back after the next 3 to 6 months? And that is our primary view. When you look at stock valuations and you think out to 2021, assuming this government support comes, you're going to have huge stimulus from low interest rates and actual fiscal spending that is going to drive markets higher. Take a look at the PBOC today. They put out $80 billion worth of support into the market.